Welcome to Bears in Exile. Today is Tuesday, December the 4th, and this is the market overview, looking at the Dow, SPX, VIX, TNA, UPFXC, GLD, SLV, and all the rest. So, I was not able to do a video last night. My data feed was all screwed up, and it still isn't quite perfect today. The indexes themselves are just a little bit weirded out, but nonetheless, there's still enough to go forward, and so we do. Beyond that, making some changes in the near future to how and what these videos entail. Trying to work out a system by which on important days have a lot of really good coverage, and on just choppy, sideways, no event, and little benefit days to have something that essentially says that. Because I don't want to take up people's time when there isn't too much to say. So, anyways, going on to today, just regular format. Starting off with the Dow, which was down just a little bit. You can see that there's coal, which is courtesy of my little technical difficulty from last night. So, excuse it just a little bit, but it's not going to make a big difference. Alright, so here we are with the Dow, and we have the descending channel and the descending channel line, the bottom of it. And what are we doing? Well, we're having some problems with it. That's exactly what we're doing. And that's alright, that's to be expected. Unfortunately, we got below the 200-day moving average once again. We do have a inverse hammer. So you might look at that and say, oh, we're all having all kinds of problems, you know, this isn't going to work out, the fiscal cliff is going to nail us, etc., etc. Certainly what the news would have you believe. Yeah, this doesn't look healthy at the moment, but it's not the end of the world either. Having a little bit of resistance here, a little weaker than I would like, but that's how it goes. Beyond that, between Friday and today, we got a downtick. The downtick was resolved today. Yes, this isn't a fully expanded, nice-looking short-term moving average bar, but nonetheless, this is good. This is rest before trying to get through this. And which isn't to say that, yeah, it's 100% going through that. Yeah, it could fail, but I'm just trying to say that this is not the end of the world, and I'm not overly concerned about just this formation yet. You get a little bit of good news, and it's going to rip. And I have evidence for that, which I will share here in just a minute. Beyond that, we have the 14-day RSI moving average in ascent. Plenty of room to move to the upside. One of the reasons why I do not believe that this is, you know, to be feared at this point. We have the stochastics holding high. Yes, the fast is trying to go down. Yes, the CCI is going down. Yes, the RSI is going down. And yes, the MACD histogram is ticking down. Overall, taken together, you could say, oh, this looks horrible. We're going to have a secondary reset. That is entirely possible. But we still have the MACD itself in ascent. You know, back here we were looking for a secondary reset. It did not occur when we saw the slow stochastic not turn. And notice, it is still not turned. It's still going up. So, am I going to give this a little more rope to hang itself? Yes. Yes, I am. And some more reasons for that coming up. 60-minute time frame. Going to use this as a generality for most of the charts tonight. And yes, here's the hole from yesterday. I have no data. But here's today. What do we have? We have the 60-minute going into the long-term moving average bar, which is still pretty darn strong. And what do we know about interactions with the long-term moving average bar? We know that if it's bullish, it bounces off, and it's a very bullish sign. We can see the descending trend line right here. You can see we hit it, pierce it, try to hit it. You know, no dice as of yet, but now we're getting into what should be some support in the 60-minute time frame. It does not have long to bounce off, but if it does, it's going to be going through this. And if it does that, you're going to have all kinds of short covering. So, is it time to give up? No. It's not time to give up yet. Now in the secondaries, we do have some not so great things. The 14-day RSI moving average in descent. That lines up with stochastics and some other things in the daily time frame needing perhaps a reset. You have some conflicting things on the stochastics, the CCI, RSI, it's very choppy. MACD histogram, MACD is negative. So overall, yes, it is more negative than positive in the 60-minute time frame, but if it's going to be caught, it should be caught here. So very interesting over the next day, 2 days, maybe even 3. But regardless, we should see if this is going to break very soon. I mean, if it goes right through this, we know that there's major problems, and we are going to have a secondary reset in the daily. But for the moment, we don't yet have that, and that's all there is to it. Moving on to SPX. Yeah. Now, in a few videos ago, talking about the descending channel, we got inside of it. We said we needed to hold inside of it. That did not happen. Struggled with it, fell out of it, and we have a spinning top today. Indecision candle, going right up to the descending trend line and backing away. But it didn't close at the lows of the day either. It's still above the 200-day moving average. The stochastics are still holding high. And just like the Dow, most of the things are in descent. 14-day RSI moving average in ascent. So give it a little more time. I would. Simply because if it does get above this, it's going to pop really, really nice. Should go up to this area right here, which was resistance when it tried to break back up. And that is in the 1430 area roundabout. And that'd be nice. That'd be nice. Almost, around about 25 points to the upside from here. That would be a nice pop. Beyond that, we've worked off, for the most part, the topping area in the heat map. Another reason why I'm not going to panic here. Not yet. Not yet. This is still essentially a sideways move in this whole little area here. Just going to give it a little more time. Moving on to the VIX. Alright. Now for some more interesting things. Okay. Now, another reason why I'm not opposed to giving it a little more time, the markets overall. The fat body spinning top, indecision candle. We are neutral in the heat map for once. We've worked off the bottoming area. That is good. It can go either direction now. It's coming into the 200-day moving average. And the upper price consensus level from the previous month, the major price consensus level for the new month, all of which should be an area of resistance. You can see the problems that it's had every single time that it comes close to the 200-day moving average. Lately, yes, piercing it, but not able to hold above it. What happens this time? We don't know. Most of the things are in ascent, so it does have that going for it. They are not at the top, so maybe there is some more room to the upside. That is fine. But by the same token, do we see this get to the top very often? You can see the CCI here. Doesn't happen that often. You can see the stochastics here. Does it get to the top very often? No. Do we get good peaks on the MACD histogram very often? No. So a little more time, yes. And everything else will tell us if there's a major problem before it gets too bad. So a little more time, yes. TNA. One of the reasons why I do believe it needs a little more time. We've talked about on so many things, on so many times, this channel. We talked about when it broke out to the upside, massively bullish. We said at that time that it was ahead of everything else, which it was, and that was a problem, which evidently it was. But is this thing breaking down? No, it is not. And what do we have today? We have a hammer, or a hanging man, whatever you want to call it. It's not at the top of a range. It's not at the bottom of a range. All that it's doing is going down and kissing the upper trend line of the channel. So is this the end of the world? No. If it breaks, closes below the top channel line breaks, closes below the 200-day moving average, we know that there's a problem. But is it doing it today? No, it is not. Heat map is fading through time, and for the most part, everything is holding up pretty well. Just slight decline on the MACD histogram. The RSI is still moving up. The CCI is still high. The stochastics are still high. They're trying to go down a little bit, but that's okay. They can't go sideways high forever. 14-day RSI moving average is still in ascent. So we know the overall trend is still up, even with a couple of nasty last couple of days. So give it more time? Yes. Will we have plenty of warning if this is breaking down? Yes. So there it is. Now the chief culprit of my belief that we can have more to the upside. Here we are, all important. UUP, the dollar. Look at this sucker. It's been in massive decline the last 3 market days. The market should go up when the dollar is going down. And has it? No, it has declined. This does not jive. This does not jive at all. We have a little tiny spinning top today. And it is really close to filling this gap right here. It is at the lower price consensus level for the month of November, which should be some support. We have the previous lows down here, which could be tested. We have the 14-day RSI moving average. All kinds of room to move to the downside. Stochastics moving down, CCI moving down, RSI moving down, MACD histogram moving down, MACD moving down. Everything is negative. We do have a dark blip in the heat map, and we do have a possible area of support. But what happens if that breaks? I think it can get uglier. We do have 2 new gaps above us, which could possibly fill in the short term. That would be negative for the overall market. But, yeah, do the markets need to catch up to this? I think that they do. I think that they do. So, as long as we have correlation and this is still inverse to the markets, unless they are coupling together to move together, this does not make sense. Nope. Not one bit. All you need, in my opinion, is just one little bit of news for people to glom onto. You have the Dow break back in, you have the SPX break back in, you have the dollar continue to decline, and then you have a short covering rally, which it will be really, really nasty. And since everyone is bearish, the fiscal cliff is going to kill us. They'll all miss. We'll all miss it. So, anyways, there's my thesis, and maybe I'm wrong. Maybe I'm wrong. Going on to USO oil. When oil is bullish, the market should be bullish. This market, does oil look like the overall market? No, it does not. We've had some green days and the market's been red. It's having some problems with the long-term moving averages, but look at this. We had a new recent high yesterday when my data feed was jacked up. That is a bullish sign. We can see that it's still fighting with the long-term moving average bar correctly and not gapping. That is a good sign. So the 14-day RSI moving average in ascent. Yes, we have some downticks on some of the other things, MACD histogram, fast stochastic, CCI, but no real thing in as a topping area in the heat map. It worked it off from yesterday. So does this one need some more time? Yeah, I think so. I think so. The election is over. There's no need for cheap gas now that Obama has been reelected. So, should this go up? Yes. Yes, it should. Now, going on to ComQ, NASDAQ. Aha. What do we have here? I have those 2 ascending trend lines we've talked about in the past videos. What's happening? We're bumping our head on the top one. Does that mean that this is the end of the world and we're going to go down in flames? No. This should lead the market, just like TNA. And what is it doing? It's bumping its head on resistance. And, you know, what's above it? Previous topping area, major price consensus level. Is this right? Wait a minute. Something's not right here. Oh, shoot. I don't have current data on this. Alright, scrap all those comments because I have no data. Like I was saying, I was knocked out last night totally, and mostly up today, but not entirely. I'm going to have to go and look and see what this looks like, because I simply don't know. Alright, well, in that case, never mind this. Very sorry, very sorry. Going on to Apple. This has to be, yes it is, this is current. Oh boy. Alright, here we are with Apple. Trying to have its run at the 200-day moving average at $600. Having problems with the long-term moving averages. Not a problem. I mean, natural. It should be a problem. Yeah, red day today, 575. It's starting to get a bottoming area in the heat map. Very good sign. We do have a secondary reset underway. Do I believe that we're going to get a cross of everything? I'm not sure that we will. Because this should be a tell. This is going essentially in a little box, sideways. We're already close to the bottom of the box. And if this breaks down, should be a good tell. But the 14-day still innocent. Overall movement is still up. And when does this end? Well, certainly we don't know at the moment. But let's take a look at this. 60-minute on Apple. Now, you might look at this and say, oh, 60-minute, look, we've busted below the long-term moving average bar, and, you know, now we're in massive trouble. And that would be correct up to a point. We have an uptick in the 60-minute time frame that should get it back up to 580, back inside the long-term moving average bar. Would that be enough momentum to start carrying it up again? That would depend on news, but we certainly have a bottoming area in the heat map. We already have CCI, stochastics, MACD histogram curling up out of a low in the 60-minute time frame, meaning that there should be some kind of turn. Makes sense for the uptick. And look at this. This is really interesting. I like this a lot. You have negative divergence, MACD histogram going back all the way to November 19th area. Actually, it is November 19th and the 20th. And look what it's done. Negative divergence. Right here's the high. And where is it today? Just a hair. Almost on the dot. I would consider that fixed at negative divergence. I think it's close enough. Actually, there's a tail right here, so actually it did touch. So negative divergence is fixed 60-minute time frame. If it's going to be caught bottoming area in the heat map, this should be a place where it is caught. There's so many people that are negative on Apple at the moment. They're just hammering it left and right, the talking heads. So we know that there's a lot of shorts in this. You know, what is going to happen when somebody pumps it a little bit? All those people are going to have to cover. But anyway, that's just my belief at the moment. I am not afraid about Apple at the moment. If it were to get to, you know, close down 560, something like that, then yes, certainly there's a problem. But for the moment, just not going to worry about it. Moving on to GE. Trying to get a better read on the Dow. Dow is down today slightly. And GE, even though it's a red spinning top, it was up. It was up. Still above the 200-day moving average. Not much of a long-term moving average bar to contend with. It's already pierced it completely. 14-day RSI moving average is in ascent. Just waiting for everything to finish its little problem here. So, more time. Yep, more time. More time. Going on to GLD gold. They were saying overnight that the Chinese were selling this one hand over fist. Why? I don't know. Bottoming area in the heat map, really nice blip. Closing barely inside the lower Bollinger Band. And it's almost a spinning top. I'm not sure I would like to call that exactly a spinning top. It did make a new recent low. It'd been nicer if it had been a reversal candle. It's not pretty. So that is not a good sign, but look at this. Stochastics already low. We just need to wait and see those turn. Everything else is getting pretty darn low. CCI, RSI. Actually, RSI has a little more room to move. Bearish cross and MACD histogram. I'm sorry, MACD histogram going negative. I don't know. I'm just skeptical that that gold can get so beat up when the dollar has gone down. That doesn't make any sense. The value of gold is fixed, and as the dollar goes down, the price of gold goes up. As the dollar goes up, price of gold goes down. So does this make any sense? No, it does not. I'm not afraid of this chart at all. Going on to SLV, silver. We had said in previous videos that silver was looking better than gold, and while it did have a really nice decline, which, as a matter of fact, I bought some calls on today, look at it. It's not anywhere near where gold is, implying that it's stronger. It's a spinning top that's green inside of the long-term moving average bar, which should be support. It's still above the major price consensus level for the new month of December. We have the 14-day RSI moving average in descent. Yeah, everything else is in descent, but I don't think it'll be there for long. We have worked off the topping area in the heat map. It is completely neutral. So, am I afraid of this chart? Nope, I am not. You know, if this is going to fall, it's going to go to 31. And do I think people will buy it there? Yes, I do. Do I think that we need a retest of this ascending trend line, which was support for a really long time? Yes. And that's all the way back here at 32.5 at the moment. So could it do that? Sure. Would I be a little bit leery at that point? Sure. So, and that would depend on what these are doing at that time. But overall, the trend is still up. JP Morgan, most important bank. Yeah, these should be getting clobbered because of fiscal cliff, right? Yeah. And what is it? It's a hammer. And could you say that this is the bottom of a possible range? It's debatable. But, you know, where is resistance above? It's not that far away at 41.35 roundabout. If it hits it again, will it break? Probably. There's nothing in the heat map. We have most things in descent. 14-day RSI moving average going sideways low. The news is all that's going to matter with this. And the moment it looks like they're going to compromise, it's going to go up. XLF financials as a whole. And it's more of the same. It doesn't look as bad as JP Morgan. Long-term moving average bar, it's collapsing. Bounce off of this will be wildly bullish. Does it have support below? Yes, it does. Lower price consensus level, previous low. Overall floor, 200-day moving average. Are we getting a secondary reset here? Yeah, we could. But am I deathly afraid of it? No. Not yet. I do believe that the politicians are going to try even a temporary little thing to make themselves look good, and then it can fall apart again after that. So there's all kinds of time still before here and the end of the year, and I don't believe that they're going to have it to be negative all the way through Christmas. Maybe I'm wrong. Maybe I'm wrong, but it's just what I think. Just what I think. So there it is. We will be having some changes, but for now, for tonight, hope you enjoy it. And as always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you very much.